The current situation in Bitcoin is hypercritical. We are about to turn bearish. We are about to get to falling prices again if we are not bouncing from the current level. That's based on a backtest, on a simulation of buying and selling Bitcoin in the past. Now, I've been presenting the strategy since inception of this channel, and I'm personally following the strategy very, very closely pretty much every day. I want to share why the strategy is now turning potentially bearish again. Now let's look at this first, right? This is the Bitcoin price in green. What we see over here in turquoise is just simply a simple moving average. Moving average you've probably seen across many other channels before. Now this moving average is special to a degree. It's because it's the 43-day simple moving average, 43 days. Now why 43 days? It's because that's what worked the best for Bitcoin in the past. Let's look at the results of the backtest first. So what we have over here is Bitcoin over the very, very long term in white, right? You might notice here, right, these crypto winters and the bull run and another winter, then another run up. This was the 20K top, then our winter again, right, in 2018 and the recovery, etc. So this is Bitcoin's price. What we see in turquoise is the back-tested result. Okay, so this is when you trade Bitcoin according to the backtest. What you notice is the performance here is way more steady, right? We don't have these massive crypto winters. What you also notice is a delta in the end performance, of course. Now this doesn't look too impressive, right? What's the delta here? It's like, it doesn't look too different. But notice how each of those horizontal lines, they are a 10x. Okay, so this is a logarithmic scale. So this is from the very beginning when Bitcoin just started out to today. And this is a massive difference in terms of US dollars. When you look at this on a linear scale, right, this is what you get. Right? Very, very different. So the backtest really produces very nice, consistent outperformance. Now, how consistent, right? How well does this strategy still work? This is a very long-term chart since beginning of Bitcoin, right? In 2010. Let me first show you these results in terms of the moving average durations. So what we see over here at the bottom is the duration of the moving average. What we see here on the y-axis is the result of that backtest, so the annualized performance. So how much do you get per annum if you follow that trading strategy? In black, we've got the buy and hold line. Okay, so if you just bought and held Bitcoin and didn't do anything with it, this is the kind of performance you would have gotten, roughly 180% per annum. We see here the 43, 44-day simple moving average. They worked the best. They gave, instead of 180% per annum, roughly 260% every single year. Okay, so that's the difference, right? That's what explains this delta here, right? It's quite a bit of an annualized difference. And you want to know now, right? We want to know now, does it make sense to use this long-term moving average if we just look, for example, at the recent past? Say we take a little bit of this bull run in 2017, we take the crypto winter, and we take all of the sideways trading range movement. What kind of moving average do we then get? What works the best? So this is the second backtest, right? A little bit of 2017 bull run and the bear market, the second bull run. Again, we get our outperformance. And again, let's look at the best moving average duration. Is it again the 44, 43-day moving average, right? Is this consistent? Is the duration for trading Bitcoin consistent over time? That's what we want to answer. And when we look at that, we also get, again, the 43-day moving average, right? 44 also works, not quite as well. So 43, it's in this backtest. And note here, right, the buy and hold line is way lower, right? It only gives us 30% per annum because we now have all of these crypto winters in this backtest as well, in the simulation. In other words, this strategy tends to time the market quite well. When we look at all the moving averages that you can potentially pick, the 43-day simple moving average is the best. I've I've also backtested the exponential moving average. There's no exponential moving average that beats this. So the simple moving average, 43, works the best. And this is the current situation. We are very, very close to potentially turning bearish. That's why this current situation is so critical. Now, I've done more of these kinds of backtests, right? So when you look here at the premium membership, I've done all kinds of backtests. There's also TradingView related scripts here, right? So when you copy paste this script into TradingView, you will see the best moving average for different assets. So currently, what do we have? We've got Aave, Cardano, we've got AVAX, we've got Axie Infinity, Arweave, right? We've got all kinds of different altcoins. We can add more in case you want to have your specific altcoin backtested. But yeah, we've got the best simple moving average, the best exponential moving average, and also a list of the moving averages simply just in a table format. So this is what I like to do, right? I like to time the market based on those moving averages. I like to look at how well did they work in the past. What I especially like about these kinds of backtests is that they tend to generate outperformance independent of whether or not you pick exactly the right moving average, right? The most important thing is consistency over time. If you have a certain technical indicator and you optimize the parameter, such as the duration here, you want to make sure that this continues to work over time, and you want to make sure that even if you get it slightly off, that your performance doesn't completely drop, right? So if we had a moving average backtest where, say, the 43-day in the first backtest works great, but in the second backtest it doesn't work great at all, we would have a problem. We would also have a problem if most of those moving averages don't work and only a few cherry-picked values work. What I like about the strategy is that no matter what kind of moving average you picked here, right? Even if you picked, say, the 17-day or the 18-day, you still would have outperformed after trading fees, just buying and holding. So this seems to be a relatively foolproof strategy. It seems to have real value. It seems to really generate signals that are somewhat useful over time for Bitcoin. And of course, some signals are more useful than others. The 43-day simple moving average seems to be one of the very best signals we can take for crypto, or especially for Bitcoin. So yeah, let's discuss the situation further in Discord and in Telegram. Links are down here. So looking forward to see you there, and looking forward to see you in the next video as well. Bye-bye.